Ladies and gentlemen, today we have the pleasure of speaking with the CEO of DEUTZ AG, Sebastian Schulte. With DEUTZ celebrating its 160th anniversary last year and marking 125 years since its stock exchange listing, the company has a long and proud history of innovation and resilience. In this conversation, we will discuss the significance of these milestones, the challenges and successes of 2024, and DEUTZ's vision for the future. Let's dive right in. Sebastian, last year DEUTZ celebrated its 160th birthday. This month, DEUTZ's listing at the stock exchange turns 125. Quite some jubilees. How important are these for you and DEUTZ?
Well, for us at DEUTZ, a company with that long history is obviously something important, and we are proud on what the company and all the employees have achieved over the years and years and years. And if you look back through the 160 years since, our founder Nicolas August Otto founded the company and invented the four-stroke principle and the Otto engine, a lot of things have happened. And obviously also then our listing at the stock exchange, our first listing 125 years ago, that's big. That was big news and something to be proud of. And since then, we have grown and, we've dared to do a lot of things. And when you dare doing things, sometimes you succeed, sometimes you fail. And that's exactly what describes the history of DEUTZ as well. But important is we also learned a lot over those 160 years and also from each other. So as DEUTZ, we certainly have become much more colorful since then, more international, we're more diverse. So we have changed and we will continue to change. But the good thing is, or the important thing is, we always remained one thing. We kept one thing, being a driving force, an innovator, and a pioneer.
What is your assessment, looking back at 2024?
Well, first, 2024 was certainly not an easy year because the economic development, particularly in Europe, particularly in our core segments, construction equipment, agricultural, that led to a fairly weak level of new orders. And in hindsight, it meant we sold about 25% fewer engines than in the previous year. And demand fell across all regions, across all markets. But as I said, European market was hit worst. Construction, agricultural, they realized the biggest year-on-year decreases. And this trend is, of course, also reflected in our results. The revenue we recorded was 1.814 million euro. And that's, again, roughly 12% below previous year. But the good news is that unlike in the past, when economic conditions on that weak level immediately led to the situation that our margin went close to zero or even turned negative, we did earn money in 24. So our EBIT before exceptional items, all that yielded in the end 76.7 million euros, and that is an adjusted EBIT margin of 4.2%. So that shows we're on a different level than we used to be. And that's a level or a margin level that DEUTZ previously only realized on the top part of the economic cycle, where particular our factories, our production facilities were almost fully filled with products. So we enjoyed the scale effects, and 24 was quite the opposite. So we believe we were on the bottom part of the cycle and yielding results that previously were only possible at the top part of the cycle. And that shows obviously that, this doesn't come from nowhere. This comes from a fairly rigorous implementation of our new strategy, where we played an important role in consolidating the classic engine market with our partnership with Daimler Truck, and then resulting in the takeover of engine portfolio from Rolls-Royce Power Systems. But we also continue to expand our service business around the world. Service is our most profitable part of the business. So we entered also new markets when I come to power generation, right? And of course, in a crisis year, and I think we can call that a bit of a crisis year given the market environment, we also in the second half of the year kicked off some significant cost down measures, which began to pay off in the last 2 quarters.
What makes you particularly proud when you think about last year?
Well, there are quite a lot of things. We had many, many individual meetings with customers, with partners, with investors, also with our employees. We talked earlier about the 160 years. So we invited all of our employees to our Cologne site for a festival, which was certainly emotionally a very, very big thing. But obviously, and most importantly, we as an organization, we learned how to align all our energy towards growth on the one hand, while including or focusing much, much stronger also on cost and efficiency. And that's only been the beginning. We're learning here day by day. But I would say that was key for the previous year. And it may seem a little counterintuitive at the first point, but in the end, cost control and growth, both is important in the face of strategy implementation, which DEUTZ is in. Not least because of the economic situation. Because in the second half of 24, as I just said, we mounted here a response with a lot of short-term measures to reduce cost, including also short-time working, particularly German and Spanish facilities. But at the end of last year, we also went into cost measures with a focus on mid and long term, where we gave ourselves the target to save at least 50 million euro on an annual basis without obviously reducing or damaging our ability to innovate in the future, but in order to respond to structural shifts.
In autumn 2024, you also updated the Dual Plus strategy. What is the rationale behind it?
Well, we got to be closer to the demands of the markets, of the customers, and everything we do needs to focus on exactly that. So in the end, we want to offer products that our customers, our end customers, also the customers of our customers, they want to have right now, and they will, and these demands, will justify pretty much our existence also in the future. That's where we came from as an innovator over 160 years. But on the other hand, we also want to ensure that we become less and less dependent on the very highly cyclical markets, which we're focused and fairly dependent on right now. So the core of our updated strategy is to make DEUTZ more resilient, to put the company on a broader base. And that means more specifically, we'll be doing much more to position ourselves not only as a producer of industrial products, but rather as a provider of solutions. And that's something we will do in areas where we do have expertise and experience. So where we have a right to, not only a right to play, but a right to win. And to give you one example is the field of energy, decentralized energy supply. We acquired a leading US company named Blue Star Power System. That's a very good example when I speak about broader positioning, because with that acquisition, we did enter a market which is as such new to us, the market for power generators. But it's new to us, but it's not totally foreign, because we used to be providing engines into OEMs that are actually quite active in the market. And many, many years ago, we were even an OEM ourselves. But now the demand for electricity is increasing significantly. The supply is becoming less and less stable. The grids are also less and less stable, and even in industrial countries such as the United States, right? And we gave ourselves the questions or the alternatives. Are we going to build that business gradually over many, many years, or are we going to kickstart it by acquiring something? And in the end, we decided for the latter one, particularly because the US, with all the challenges that we also see over there, is a very, very important market in that field. Plus, we do have a strong service organization, a good footprint over there, great management team. So all the preconditions are met. That's why we went into that acquisition, which paid off pretty well since we actually closed that deal.
At the same time, you are continuing to focus on the traditional combustion engine business. What is your assessment of this segment?
Well, in that traditional business, and nice that you call it traditional, because we call it also our classic business. So I think it's a nice play of words here. So we expect that the consolidation of the market is more than just a trend that will continue. But also, we are developing, producing and selling combustion engines, particularly for the off-highway sector. And the off-highway sector, that is a sector where the threat, and I call it here with a bit of a negative intonation, but it is in the end, obviously, for a business model, a threat, the threat of battery electric products, well, is there, but not with that rapid degree of change like we see it on highway. And so that's something which leads us to the belief that the market is very relevant, not only the next 3, 5, 7 years, but probably far beyond that, at least in the larger displacement size, higher power ranges. And that means we are well positioned there. We need to put stronger focus here also on cost effectiveness and also in entering into the right growth markets. And that's, last year we showed with a couple of measures what we mean by that. Because we acquired an engine portfolio with using Daimler Truck engines for the off-highway segment. That's a business which MTU, or Rolls-Royce Power Systems, used to be active in. So we took that business over from them. And this was a very, very important step in our classic consolidation strategy, because with that, we not only gained access to very, very attractive products, the mentioned Daimler engines, but also to customers in the off-highway sector on several continents, which we have never been able to win as customers before. And now we are here very well positioned, not only in the customers, but also in higher power ranges. And again, that's the part of the market which we believe will have a pretty long and bright future. Second step we took is we acquired 50% of the shares in a local supplier of emission technology, HJS, near Cologne, pretty much. These guys are a global market leader in exhaust after treatment. And in doing so, we are ensuring that we do have in the future a much more resilient supply base in these very, very important components. And we also send a signal that we'll believe in Germany as a good area for industrial companies. And the technology, not only exhaust after treatment, but obviously embedded into the entire combustion engine space, that's still a long way away from being put into the museum. All right. So it's something we commit to, right? Without obviously ignoring new fields of business. Last point, which we kicked off last year, was a cooperation with Indian tractor maker TAFE. Great company, great people working for them. And we're partnering up with TAFE for the production of small engines in India for the use in TAFE's products, but also for us to sell them on the global base, and also to gain access to components made in India, a market where with all change of technology and growth, the combustion engine, especially in the off-highway segment, will be relevant for quite some time.
The service business also remains a core element of the updated Dual Plus strategy. What is the objective here?
Well, service is a very attractive field for us, so we'll continue to grow here. We'll continue to expand. The service business as part of DEUTZ has already been growing fast-paced over the last years. And now our objective is to increase the very profitable revenue from currently a bit over 500 million to a bit over 1 billion by 2030. And that's a big ambition, but we have a plan behind that. We're doing this through, again, targeted acquisitions in countries and areas where we are already represented today, where we can grow, but also with entering into new geographical fields, but also into, let's say, white spots from a business model perspective. So far, service has been mainly focused on parts, on selling of spare parts, and a bit of work on the machines. We certainly can grow in these fields, particularly in the work in the machines, but also here to expand in serving third-party business, but also slowly, but with a focus entering also into new business models, for example, using digital technologies.
What is DEUTZ's target here when everything is tallied up?
Yeah, we have a big goal, right? We have a big goal. Last year we were a bit below 2 billion revenue, and we want to double the business by 2030. So we want to get a profitable revenue of 4 billion. Yeah, that's double what we currently do. And of course, that'll demand really a great deal of all of us, not only in headquarters, actually particular in the businesses in the regions, where the business is implemented. But it also requires courage to go into new areas of business without obviously giving up the strengths, because we've got a lot of them. But with these strengths, with the resilience, with the history, also with the pride we've developed over the years, I'm more than convinced that we're going to be successful there. And sometimes it's also important to have structures, to have the preconditions, to create also the preconditions to make quick decisions that things get done. And that's certainly an area where we can and we will and we have to improve. Another thing, we're working on in 2024, for example, we held a large number of workshops, more than 20 workshops in more than 60 locations that were able to address what we have in mind to all of our employees. And we literally physically spoke to more than half of our employees, 2,500 employees in person, to talk about our Dual Plus strategy, explain what's behind that, because it's so important that the people working in an organization, they know, why they're doing what they're doing. And that's something we invest tremendous lot of time into it. And it's well invested time, because with motivated people who understand what you want from them, well, that's precondition to achieve to achieve the targets, the objectives, and to be successful, right?
That brings us to the end of our discussion. From navigating economic challenges to driving innovation and sustainability, DEUTZ AG continues to evolve while staying true to its pioneering spirit. Thank you, Sebastian, for sharing these valuable insights with us today.
All right. Thank you very much.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.
Free audio post-production by alphonic.com.